My dear friends. My dear colleagues. I am often asked, quite concretely, how one can read meta_quant and what kind of technical criteria can be used to make trading and scalping decisions. One of the simplest ways, which many already do, is to follow price action. It's what we call trend following, or the trend is your friend. It's true and false at the same time. It's a double-edged sword. The advantage of using meta_quant when observing and following price action is that these price movements can be visualized in a three-dimensional plane, in 3D. In contrast to price action on a 2D plane, where you can only see the price going up or down, with meta_quant and its 3D scene, you can see the prices moving with the white 3D price line in a three-dimensional form. This means you can see exhaustion within an upward price movement, or acceleration within an upward price movement. Just as you can see exhaustion within a downward price movement, or acceleration within a downward price movement. With the 3D price line, you can not only see the price going up and down, 2D plane, but also observe whether the price is rising or falling within an upward slope or a downward slope. And believe me, that makes all the difference. Indeed, depending on the size of the best bid size and the best ask size in the order book, which are in front of the market order at the time of execution, you can observe a slope in the 3D price line that can be more or less steep, measured in degrees/radians, and inclined towards either a decrease or an increase. This allows us to identify particularly interesting divergences that occur, especially during upward price movements with a downward slope and downward price movements with an upward slope. In these scenarios, divergences generally indicate the end of the current price movement, a sort of breaking action, followed by a reversal. What is remarkable here is that these types of price divergences are based on both price movement and the size of the best bid and best ask, allowing the calculation of the slope degree of the price movement. It's as if you had an additional, first choice, dimension in your analysis. Next, once we have a good view of price action, especially the concept of range, we turn our attention to a second type of data, volumes. More precisely, we focus on the nature of the market order flow. Volume refers to the market orders. When I talk about the nature of these market orders, I mean their side. Here, we analyze whether there are imbalances in the market order flow, more buyer market orders or more seller market orders. The goal is to capture a certain degree of imbalance in the market order flow. We primarily look at their side and size. Then, in a third step, we examine the order book structure, specifically the state of available liquidity in the bid side and the ask side of the order book. The objective is to see what the market maker is willing to reveal in terms of the order book structure. Finally, we focus on the most crucial aspect, order execution. This aspect truly reflects the impact of volume on price action. It plays a decisive role in our trading/scalping decision-making process because it allows us to reveal the true intention of the market maker, who executed the market order. We can determine whether the market maker is generally willing to execute the market order or if they are reluctant to do so. To determine this, we examine the market-making compass at the center of meta_quant. This compass calculates market making and illustrates the cumulative successive impacts of market orders on price action. The market making compass is extremely important, and when you compare it to price action, you gain valuable insights and a time advantage in predicting short-term price action. For more information and details, feel free to take a look at my various PDF files available for free on the MetaQuantUniverse website, https://metaquantuniverse.com.